Welcome to Matters Financial and Geopolitical from the Frontier, and I trust you all had a great weekend. Markets are loving Macron. The results of the first round of France's presidential election set off a classic risk-on rally, but it seems to be petering out a little, but let's see how things develop. But the market took Macron and Le Pen second round as a net positive because they see it a 90% chance that Macron wins. That seems to me of itself a very high percentage for now, with a couple of weeks to go. The euro gained sharply, topped to 109, and we're now at 108.52 trading. This will be interesting to watch as well, see how people see this playing out. Jack Hassan's film, A Bigger Splash, in 1974, conveys the inner life of David Hockney's very famous picture of someone diving into the pool. Put it up for you. I like this from Kira Misses. April 9, Diani Beach, I want to go back, as do I. Ibrahimovic, Man United striker, one of football's greatest ever stars and characters, says Piers Morgan, and he's not wrong. Gunmen shoot and injure conservationist Galman in Kenya. Gunmen shot and wounded Italian-born conservationist Cookie Galman at the conservation park in northern Kenya on Sunday, a source close to a family said. The 73-year-old author of the memoir I Dreamed of Africa was shot in the stomach after the vehicle she was driving in was ambushed by a group of gunmen, the source said. Of course, Cookie wrote the book I Dreamed of Africa, which is a lovely book, and if you haven't read it, you should. A lot of tragedy for the family, unfortunately, and this is another one. If you get a chance to look at this, a visual journey through Laikipia, this is the area which is being contested right now. And bad news, I'm afraid. Bullets used by Pocots in Laikipia raids are from State's Eldoret artillery. That's not a good sign. King Lear, Simon Sharma quoted King Lear, Shakespeare, "When we are born, we cry that we are come to this great stage of fools." I like this picture of the day. Displaced children play at Kaza camp in Iraq. And then this photograph from James Ndege, hometown in Nairobi, he said. Theresa May is basking in a 20-plus point lead over Labour, and May personally is enjoying an even larger margin over Corbyn, which is a point worth noting. The results were Macron got 23.75% of the vote. Le Pen came second with 21.53%. I think the markets have reacted positively because Le Pen did not score higher than the polls were indicating, and I think that was the concern. Fillon was 19.91%, and Mélenchon, who was sort of populist from the left, 19.64%. Look at this photograph of Francois Hollande viewing the polls showing Macron and Le Pen neck and neck. Later estimates suggest Macron is leading, and we now know that, in fact, both of them are going through, but it was Macron who led. France heads to the poll on Sunday. What can we expect and how will the markets react? I like this tweet from Emmanuel Macron, a vote he wrote on his tweet. And it's no secret that we will not be cheering madly about Sunday's result produces a second round between Le Pen and Mélenchon. And that was the worst option for the markets and the European Union. Citibank called it a volcano risk, according to Citi, with the nightmare scenario being a runoff between Le Pen and Mélenchon. Well, it didn't happen, and we've seen a sort of a good recovery in the euro up to 108.60, and a very strong rebound right there. The Persistence of Trump Derangement Syndrome by Adam Gopnik in The New Yorker. Our problem is not Trump derangement syndrome. Our problem is deranged Trump self-delusion. This is the habit of willfully substituting as a motive for Trump's latest action a conventional political or geostrategic ambition rather than recognizing the action as the daily spasm of narcissistic gratification and episodic vanity that it truly is. The bombing of Syria, for instance, was not a sudden lurch either in the direction of liberal interventionism a la Bill Clinton and the lands that were once Yugoslavia, nor was it a sudden reassertion of a neocon version of American power a la both Bushes in Iraq. It was, as best as anyone can understand, simply a reaction to an image turned into a self-obsessed lashing out that involved the lives and deaths of many people. It was a detached gesture, unconnected to anything resembling a sequence of other actions, much less an ideology. Nothing followed from it, and no doctrine or even a single speech justified it. There is no credible evidence that Trump's humanity was outraged by the act of poisoning children, only that Trump's vanity was wounded by the seeming insult to America, and by extension to him. It may be perfectly true that the failure of the Obama administration to act soon in Syria will go down forever in the historical ledgers as a reproach against it. Or it may be that the wisdom of the Obama administration in not getting engaged in another futile Middle Eastern folly will go down in its favor. But it is self-deluding to think that Trump's action was meant to be in any way remedial. It was purely ritual. And the ritual acted out was the interminable Trumpist ritual of lashing out at those who failed to submit. This ritual act of someone whose inner accounting is conducted exclusively in terms of wounds given, worship received, and winnings displayed. The problem is that he is the President of the United States, and that the one appetite that he does have is for announcing his authority through violence, a thing capable of unimaginable resonance and devastation. That's the only Trump syndrome we ought to worry about, and it can become deranged. Putin was meeting with the Abu Dhabi Crown Prince Nahyan in Moscow, discussing regional issues, Syria, economic cooperation. China hopes that all relevant sides exercise restraint and avoid doing anything to worsen the tense situation on the peninsula. USS Carl Vinson strike group is apparently near the peninsula now. International markets, I wrote a piece about the UK economy, is not going to fall off a cliff. Cut my trip short to London, which city I've always enjoyed, since being sent to Westminster School at the age of 13. And in January 1979, during the winter of discontent. Mrs. Thatcher and the Iranian Revolution happened that year. A Gil Scott Heron, who was a poet, rapper character, said the revolution would not be televised. It might not be in places like the DR Congo, but the Iranian revolution unfolded on our television screens. After a brief interlude up north at Durham University, I started working in the city of London. So London to me is like Mombasa. I was keen to take the temperature. On my return, somewhere in the lounge at Dubai Airport, I learned that Theresa May had called a snap election. And then I reflexively, I've always been reflexive about the markets, as I have now become about Donald Trump's tweets, which are just so live and direct. Looked at the price of the pound. The pound had found an off-ramp and rallied from just above 125 against the dollar to as high as 129 momentarily, and closed out the week at 128.05. I recall a meeting in Nairobi where I'd been laying out a bull case for the pound. I see an eventual return to 140 versus the dollar, which equates to 144.20 versus the shilling. And the gentleman in question had painted a dystopian future and talked of sub-parity versus the dollar. So allow me to start with the pound. Last week's price action was an important signal. I see the Prime Minister Theresa May winning the snap general election by a mile, like Shergar did when he won the Epsom Derby. Respectfully, Jeremy Corbyn strikes me as a Neil Kinnock figure, and she is going to parlay her party's 20-plus point lead over Labour into a huge majority. Political risk is not going away, but it is not going to ban Prime Minister May not having a mandate. That will mark a big shift. There is a sizable short position in the pound. There were a lot of naysayers out there smelling a good old-fashioned sterling crisis in the air, like the fellow I met in Nairobi. These short sellers are going to be well and truly burnt, in my opinion. My ground-level observations from London are as follows. The economy is not going to fall off a cliff. It's a resilient, plucky economy, and has always survived on its wits. And splitting off from Europe is going to prove a big catalyst for getting back in touch with its inner psyche. And in a world of serious uncertainty, the pound has the potential to morph into a Swiss franc, a safe haven, as it were. So my point is, selling sterling is yesterday's call, and it's time to look at this from a different perspective. A very interesting currency pair to look at now is euro sterling, and of course, the euro appreciated a great deal this morning. The first round of the French elections were reported in the early hours of the morning, which by the way was how Brexit and Trump was reported. Markets have moved enormously of late in the early hours, and the first reaction will be interesting. Markets have lulled themselves into a sense of security that Marine Le Pen will not break clear of the pack. She didn't in the first round, but she came second. She's scoring around 23%, and I said anything above 26.5% will be noteworthy. Something close to 30 would send the euro into a tailspin. We didn't get anywhere near that. And that she will be triangulated in the second round. If we see a big score from Le Pen, that would be something around 30%, we shall see a big reaction to the downside. Anything in line with 23% will spark a further rebound in the euro, and there we go. Le Pen has served notice on the euro, and her desire to press the exit button is there for all to see. So I'm saying euro sterling is worth keeping an eye on, but I'm looking for a move to 76. Crude oil crashed and burned last week. West Texas Intermediate for June delivery dropped 2.2% to $49.62 a barrel. In New York, we're now trading at $49.90. And I expect further selling and a move back to $47, and a break below that would bring $40 a barrel into view. Gold closed out the week unchanged. Actually, it dropped this morning to $12.73. The point is that geopolitical risk, while elevated, has entered a new normal. President Trump has injected a neck-jerking whiplash level of uncertainty into the equation. I think I see gold reaching $13.50 over the next few weeks. Let's move on to the currency markets. Start off with the euro, that's at 108.76. Dollar index has fallen through the key 99.50 level, and I'll show you a chart in a moment. Dollar yen 110.25, Swiss franc 0.9970, pound 127.93, Aussie 0.7560, India rupee 64.552, South Korean won 1133.04, the Rial 314.84, Egyptian pound 1792.40, and the Rand is around the 13 level and has stormed back. Dollar index, that key level now breached properly. Let's see what happens over the next couple of sessions. Euro sterling, about which I'm bullish on sterling. Take a look at this. This might be a good entry type of level here. Commodity markets, gold 1271.68. I think we're going to about 13.50. Crude oil $49.90. Take a look at this chart. It fell sharply last week. I think after a little bit of a push higher this morning in the pre-market, we'll see a further sell-off as soon as today. Shale's the wild horse OPEC can't tame. And that's a great article from Bloomberg Gadfly. Take a look at that. Saudi king restores state employee bonuses as overhaul broadens. restored bonuses and allowances for Saudi state employees, appointed one of his sons as an ambassador to the US, and promoted another within the energy ministry. The latest spate of decrees aim to bolster economic growth and reorganize the government. The economy shrank by 18.6% last year. That's not Saudi Arabia, that's Venezuela. In 2001, it was the richest country in South America. It is now among the poorest. According to the World Bank, African countries will need to create about 50,000 jobs daily until 2035 to keep pace with population growth. What's not happening? South Africa must stand up for democracy on the continent. This is Musi Maimene, using the Zambian example, and an interesting article there, Daily Maverick. South African oil shares is up 3.04% this year. I like this photograph of Gigaba, this South African finance minister. Zapiro is a cartoonist in South Africa who's very irreverent. Malusi's Roadshow. Dollar versus Rand, what a rebound. We're now back near the 13 level. I think it's overshot, but let's see how it behaves. King Salman welcomed Egypt's President Sisi in Riyadh. The Egyptian pound last trading at 17.92. Nigerian oil share down 6.27% this year. Ghana Stock Exchange Composite Index up 11.64% this year. Very interesting index produced by Quantum. Africa Investment Index ranks Botswana top. You've done Zanzibar, now try Likoma Island in Malawi. It looks very good. I haven't been there. Joblessness is an existential threat to Kenya's future. Interesting article in the FT by John Aglenby. And this is the issue about job creation. I mean, you know, the demographic dividend won't be a dividend if there are no jobs. Deacon's East Africa reports a full-year loss after tax of 276.345 million shillings. In the second half of 2016, several factors negatively impacted the peak trading season, resulted in suppressed sales and margins. Existing malls registered lower footfall, and new retail property registered lower purchase conversion rates that led to cannibalization. There's a lot of optimism around about all the malls being built, but this is not painting a very pretty picture. A locomotive is seen at a construction site, a BSGR project near Sultan Hamoud, Kenya, May 18 to 2016. Nairobi oil share is up 0.12% this year. NSE 20 is down 1.81% so far this year. Once again, I am grateful that you stopped by.